What's going on, y'all? It's your boy Next Trade Lou, and I hadn't created a video in a while, so I thought it was probably a good time to do so, just to talk about a couple things. Um, yeah, man, let's get right into it. So last week we had an FOMC rate decision that came in, and the decision was a 25 basis point rate cut. So that's going to affect a bunch of things: credit card, variable interest rates, rates for high yield savings accounts. I'm sure if any people have high yield savings accounts, I'm sure the banks had probably sent you emails saying that the rates are going to be lowered. That's just because the rate in which banks are borrowing from each other is also lowered. So yeah, again, it's gonna affect a lot of things, but it particularly affects the stock market, and I think any rate cuts are are bullish. As we saw, the markets had already been on a tear. They had already been making new all-time highs, and when that decision came out on Wednesday, you saw the market took a crazy nosedive, but then quickly recovered. We finished at the high of the day, and then we just kept pushing, making new highs, making new highs, making new highs, and so we're at all-time highs now. I think we saw that the S&P 500, they had they had their highest close ever. I think the um, I think the S&P 500 closed over 6,700, I believe. I haven't actually looked at the S&P 500 in a while. The actual index, I trade obviously we trade the futures contract, so the price, there's going to be a discrepancy in the price. So, but anyway, moving on to what I wanted to talk about. So this right here, this chart is the MNQ. So actually, I was going to bring it just to let's go just to NQ real quick. Let me see here. Okay, so this is Friday. So Friday was the 19th. Today is Sunday the 21st. So I just want to talk about um, what we saw. I'll bring it back. I'm going to talk about what we saw on Wednesday the 17th, and then we're going to look at the 18th, and we'll look at the 18th, and we're going to look at the 19th as well. So let's bring it back to the 17th. So right click on the scroll bar area. We're going to go to the 17th. Okay. Let's see, what's this here? All right. So 2 o'clock, we see 2 o'clock FOMC rate decision. Market tanks. And we start doing all this stuff. At 2:30 is when Fed Powell started speaking, made a nosedive, and then we quickly recovered into the close. We finished up in the 24,500s for the NQ futures contract. So, all right. So now that we see what happened on Wednesday, let's look at Thursday. So obviously we know that the Thursday's futures contract date opens up Wednesday at 6. So market just continues to be bullish all throughout the night, and we're just continuing to make new all-time highs. At this point in time, these are levels that the market had not seen. So market just continued to push overnight, just push, push, push. You see over in the London session, markets just keep continuing to push. And as we're getting to the pre-market of the New York session, see the market kind of takes a nosedive. So the concept I wanted to go over was that golden ratio that, if you're on the live streams with us, if you're in the group, you always hear us talk about, constantly 61.8 golden ratio, or maybe the 38.2. That's just Fibonacci levels that it's just a natural number and just plays out in life. And that's just the best explanation I have for it. I've seen the markets just constantly and over and over again just react at these levels. At the end of the day, if you're a day trader, sometimes a lot of people get caught up in the why things are happening. I mean, you can do all that investigation, all that research, but at the end of the day, just know that no one really knows what the market is gonna do at any time, just because there are so many different traders out there in the world, and so many different hedge funds and and investment firms that they can create a buy or sell order or do whatever. There's spoofing, there's layering, there's all different types of things that affects the market on an intraday basis. So always trying to figure out why and being so nitty gritty with everything, it sometimes it's not conducive to being successful as a trader. So for us, we're just here to look at patterns, see patterns, and then react to those patterns and keep your risk intact. So again, what I'm talking about here is golden ratio. I think I made another video on golden ratio, and I'll probably link it in the description just so you can see. But I thought it was kind of cool the way how the market reacted to the 61.8 level on Thursday as well as Friday. But I'm gonna go over the Thursday one first. So as we can see at this point, the market had made a high. The high of the day was it was in the 24,760s. Low of the day was, call it 24,500, right? So market, so as what I'm gonna do is I'm gonna just mark off this 61.8 level, right here. And again, as we go through the video, you're probably gonna be like, hey, it's all hindsight. I mean, yeah, we're looking at it in hindsight, but in the moment, if you see that this level, if you see that level, and you recognize the pattern that the market always shows, that if you're constantly watching it and you see the market do this thing, there's a higher chance, it's more than likely that the market is gonna do something over and over again than not, and that's just the edge. You see what I'm saying? So, okay. Again, high today, 24,760s. Low today, 24,500 level. We see that the market takes a nosedive at 8:30, and again, we're noting the 61.8 golden ratio level, which was 24,000. Call it 24,600. Okay. Market comes down to that spot. So if you're going to be a person that's going to be a golden ratio trader, I would say you always want to keep your risk intact, because again, this trade can lose. It can and will lose. This is not a 100% guaranteed strategy. This is an edge in the market. Trade this edge, keep your risk intact. Don't over leverage, because you don't want to take that trade where you think it's going to 100% work out and then it goes and hits your stop, but that stop loss takes out your whole account. That's not what you want to do. Get into the trade, follow your risk management, and you should, just do that and see the results and track that over time. And as you track that over time, you'll start to build more confidence, and then you'll be okay with the losses because the wins will come. All right. So gold market comes down to the golden ratio level, and I think we see an immediate bounce, right? Again, it's not 100% guaranteed, but it is a very nice feeling when it does work. So golden ratio level, and if you put a risk to reward ratio on it, right? You can go ahead and put a risk to reward ratio. If you go into the market here, I would say if the market goes through and closes below the next Fibonacci level, then that trade's invalidated. That's one way to look at it. There's many ways to look at it, but again, you want to keep your risk under control. So if you enter the trade here, if the market goes below the next Fibonacci level, then the trade's invalidated. This trade easily gave 1-to-1. Apparently it's given 2-to-1, and then it even gives 3-to-1 and makes a new high. And again, we've seen the market do this many times, where the market comes to a golden ratio spot and then goes and makes a new high. If you took this trade, there was zero heat, okay, and just kept going. That's okay. 1-to-1, 2-to-1, 3-to-1, and maybe even went 4-to-1. With my psychology, I'll admit it, I'm not holding 4-to-1. 1-to-1 is good for me. I'll take that 1-to-1. I mean, that's what, 24,600. That's damn near 50 points. 50 points in the Nasdaq, you're good. You can be a trader that holds it all the way up here. That's not me, to be honest. I'm not gonna hold you. I ain't gonna hold you. That's not. I'm not doing that. So that's how that goes. So okay, so move on. So okay, go and get your golden ratio trade. And again, these are things you gotta sometimes be extremely patient, because you don't know when that trade is gonna happen. It could happen at 9:30 if the market had done a crazy range, overnight. Maybe the market expands its range throughout the day, then comes back at lunch. Or I mean, it all depends on how you want to trade it and when you want to trade it. If you already have another trading strategy, and maybe the golden ratio opportunity comes later on, maybe this wasn't your time because you have a more select time of when you're going to trade. But okay, moving on. Let's go to the next day. So we see what happens on Thursday. Market closes. So again, Friday's session opens at 6 p.m. Thursday, and that's what this is. So we're still on the 18th. So one thing I always say for people to do is always make a note of the previous day's high and the previous day's low. Those are just very good levels to watch out for, if anything. It doesn't matter the kind of trader you are. I think for me, those are just always levels to be aware of. So as we see, we're moving throughout the afternoon. Sorry, not the afternoon. The overnight of the Friday session. You can see that the market made a low, and they're running up. And let's make a note of the previous day's high. Market came up to 24,800s and got clapped. So as the market's opening, we see at 8:30. At the 8:30 pre-market level, the market continues to rise. 9:30 happens. Again, be aware of this level, right? Be aware of the previous day's high. For me, if I'm long going into previous day's high, I'm making a mental note that previous day's high could be a potential resistance spot. I would not want to get caught slipping and have a trade be in profit, and then the market just completely reverses on me, and then I'm taking, I turn a nice win into a loss when it could have been prevented knowing these levels. So let's go ahead and see how the market ended up playing out this day. So again, we know this level, previous day's high, potential resistance. Let's see what the market does at this level. Okay, let's see. From this level, the market proceeds to do it looks like, no, we're not even talking about that 38.2 bounce right there, but from the 24,820s, call it, down to 24,750s, that's damn near a 70-point drop off the previous day's high. Again, not saying to short that level, but if I'm long going into that spot, I'm definitely at least taking profit or trailing. However you trade, just know that level and be aware of it. Okay. But what I really wanted to get into for this video is I really wanted to talk about this golden ratio level, right? So we have the 38.2, we have the 50%, and we have golden ratio. Okay, and so you can, because the closing price in 61.8 was so close, the Fibonacci level, it didn't really display. I'm expanding the chart out so we can see it. Okay, 61.8 level, we're seeing that it's 24,000, call it 720s. Well, it's 717. So let's go ahead and mark that level off. We're gonna mark this level off just to have that level. It's also good to be aware of the previous day's closing price as well, because that could potentially be support or resistance, depending on how you look at it, depending on which side of the market you're on. Okay. So now I'm going to go ahead and fix it. So we've notated the 61.8 level. Let's see what happens. So again, the previous day, the market had made a new high. They came down to that 61.8 level, and then they ran all the way up, made a new high of the day, new all-time high, just continued running. Let's see what they do today. So market, okay, market's coming down, and again, patience is key in this market. Market comes down to golden ratio and previous closing price level. So again, let's go ahead and let's go ahead and do a risk to reward. So if you were to enter here, as I've already stated, potentially your stop would be the previous, it would be the next Fibonacci level. So 1-to-1 level will be around the 745s, 2-to-1 will be around 24,775s, 3-to-1 around the 800s, so on and so forth. Let's see what the market ends up doing. I mean, again, it's hindsight, so it's not. It's hindsight, but you know, we took this trade. I did take this trade on a couple of accounts. So, but again, I'm not the guy to hold all the way to the new high. I definitely didn't do that. But you know, this it just goes to show that if you follow a certain system, there are going to be wins, there are going to be losses, but you just need to be emotionally and mentally resilient enough to just continue taking those trades. So that's what happened on Friday the 19th, and we can see that the market just continued to run, and eventually they sold off later on, but again, it's they sold off in the after hours, like after the market closed. But they continued running. So if you took this trade, that's 1-to-1, 2-to-1, 3-to-1, 4-to-1, 5-to-1, maybe 6-to-1. Again, I'm not holding the trade that long. My psychology isn't built that way. A 20 pointer, 30, 40, 50 pointer is good enough for me if I'm just taking that one trade. So you can see it was a good day for all the bulls in the market. Bears, you could have gotten trades in there if you were one of the bears in the market. But at the end of the day, you just want to make sure your risk is tight. And I personally recommend people, if you are, depends on the size account you have, you should be trading micros because volatility is coming back. We did have the VIX is still below. The VIX is still below. I believe it's still below 20. It's at a 15 right now. It's at a 1545. So, I think volatility will be coming back as more people come back into the market with the interest rates being lowered, and they also spoke about opportunities for more rate cuts in the future. So we'll see what happens as the year closes out, but it's gonna be very interesting to see what happens. We are also on the December contracts now, so Q4 is upon us. I would say for us traders, let's finish out Q3 that we're in now. Let's finish that out strong, and then let's go Q4. If you haven't hit your goals, or if you're not even on pace with your goals, at least try to be as disciplined as possible going into Q4, and let's finish out the year strong. So, and that is the video for me. Again, I'm your boy Next Trade Lou. We are trading live in the markets every day, so come tap in with us, man. Peace.